Let's move on to what's a $100,000 or maybe even $1 million insight that you can share with the group that might be able to serve the group or maybe help the group members possibly serve you as well. And I'll just start here with Manny and work our way down.
President Ronald Reagan once had a saying, trust but verify. And you don't need to tell them that you're verifying it. Founders are very ambitious. Founders are salespeople. And in some cases, they forget things or they say certain things. So looking into that, I think that's important from my experience. Also, you trust your gut. The more meetings you have with founders, if I know you maybe you're here raising money, but more meetings you have, you start to have a good pattern recognition of asking questions and seeing their results. I remember I have a mentor who was an early investor in Google. They invested in this thing called the internet in the 90s, and he invested in PayPal, Google, and a few others, and he was kind of coaching me behind the scenes. And there was a startup that had a great pitch deck, great everything. He's like, look, this is worth a meeting. I think it's a go. So I went and met with this founder, talked with them, asked them questions, watching body language. Guys, check out body language type videos. It's pretty good. It's better than what comes out of a person's mouth. So there was a hot gaming company, and he talked about all these people that invested, which they did. And I'm like, okay, well, where does the money flow then? Oh, it flows through that to PayPal. Oh, great. So show me the PayPal receipt, show me the numbers. What are you talking about? Everyone else doesn't ask for that. They just invested. Oh, you're offending me. Well, I'm just trying to understand. I'm so offended. He was offended, by the way, wanted our money. And I caught that early, and I was really seeing that he got past someone that was so experienced. But then again, when you're sitting there talking to multiple people, you get a good pattern recognition. And don't be shy to ask a question. And if you have a hard time in the beginning stages, being this business young, sometimes I had a hard time asking a question. So I had one of my colleagues ask a question for me so I don't look like the bad guy, especially if it was referred by someone within the group. And oh, by the way, I forgot to mention, I started my career as a single-family investor. We still buy single-family homes and multifamily. I love real estate. That's where the wealth primarily comes from. We're in multiple states, and we also do invest in certain projects. We just completed a 100-plus unit in North Bend, Washington, ground development. So feel free to remind yourself I'm in real estate, not just a tech investor. But there's successes beyond just writing a check. So if you write a check, the success could be the company fails or goes up, but you're going to have follow-on. You need more money beyond just the first check if you decide to invest. The company does well, you need more money. I've been what you called crammed down, meaning I'm not pointing out this big venture firm, but they wanted to, it's called clean up the cap table, get rid of the smaller investors. And so you pick a winner, you expect it, hey, this is the next big thing, and then because they have a lot of financial power, a lot of the angels don't see that. Fortunately, I've seen the cycle now. It's 14 years in it. Now I've seen the cycle from here to there to IPO and what happens in between and what people don't talk about in the news. So my suggestion is if you're going to make an investment, also look into who could the next money come from. Because it's not one check only needed, one round of funding. There's going to be another round that's going to support them if they're in the tech world. So thinking about that, making relationships with other investors that are a little bit later stage, share notes, make relationships, and then you can massage a few things, especially if things don't go well. You'll figure out how to have what you call the soft landing, have it sold to another company so you don't lose too much. Thank you.
Thank you. So Keiretsu Forum, we have an angel network. We also have a family office, and we also have Keiretsu Capital. So there are multiple opportunities for individuals to connect with us. Some of the $1 million insights that I have, because we do have family offices, we have a network of, it's amazing the group that you have, Richard. I've been talking to some of the people, and you've got entrepreneurs. So I have a few things that would apply to everyone, and I say long-term focus with exits, clear vision and purpose, diverse membership. You talked about the expertise that we each have individually. Surround yourself with individuals who have expertise in other areas so that you can communicate with them. As you do due diligence, you can bring in those experts and they can share their information with you. Legal structure and governance is very important, strong communication, risk management, as well as networking and partnerships. I know as we all leave here, we each have our own groups. We need to connect more with each one of us. We're not competitors. I know when I first started 20 years ago, everybody saw us as a competitor to them, and that's not what we are. We're not competitors. It's all about getting these companies fully funded and creating returns for us as investors. So I say, let's all work together and see how we can communicate better after we leave today.
Yeah, I'm going to actually start by just echoing the two before me. Manny, exactly, trust but verify, related to the last story I gave, and Connie, my $1 million insight is if you're going to be a part of an investment group, be a good team player. It's a team sport. You're not out to belittle other people. You're not out, treat everyone with courtesy, with respect, listen to what they have to say, and have an intelligent discussion as to the merits of what you're talking about. Help each other. The reason I joined my group is that I've had some mentors within the group, and they've been giving. Don't try to make money off other people in your group. Don't try to promote yourself. I mean, that's a ground rule in any investment club group. Don't try to promote yourself, make money off of others. The thing that got me angriest was, I'm not going to say who, but somebody who I thought was really trying to scam people at this conference. And do you remember in The Graduate where the person says, I'm going to leave you one word, plastic? One word, Roth.
Thank you, Dr. Kerwin.
Awesome. We know the value of doing due diligence on your investments, on people that come in and out of your life. Please don't do those things in a silo. Jennifer and I love getting phone calls from others that are investing in businesses, in funds, in opportunities. If we know the person, we can help you out, we can give you an idea. Please share. The worst thing you want to do is make an investment that was ill-advised and you realize it and now you feel shame and you pull in. Please reach out. We are here to help. We have created organizations for just doing that. So that's what I would love to share with you all.
Yeah, I would say to start with investors local to where you live, or investors local to the deal you're acquiring. If you're in San Diego and you're buying a deal in Austin, then start with one of those two locations with investors. And then start with people that are industry specific, no matter where they are in the nation. So if they made their money selling their med spas, then maybe go to them first for a med spa deal. We've found that during due diligence, if you bring in like an OBGYN doctor to look at buying an OBGYN clinic, well, then it's going to help with the due diligence. And if the deal is 1 out of 1,000 or 1 out of 100, Michael might lean forward and say, oh, well, is there room for another investor in this deal? And there's a saying in the investment club world that, like, if you ask for advice, you might get capital. And if you ask for capital, you might just get advice. And if you start with an anchor investor who made all their money in the exact niche that you're going into, and they take half the deal or a quarter of the deal, all the other investors will come in and you'll sleep better at night because another brain with 30,000 hours has dug into that deal and they're risking their money in it too. And it just shortcuts the whole capital raising process very quickly, I think.
And the last thing I'll say, and then we'll stop here and give a round of applause to our panelists, is as someone that gets pitched a lot of deals, so representing a trust company, we have a lot of people that approach us and are pitching deals, whether they're real estate syndications or private direct deals, real estate transactions. And what I'll tell you is in some instances, not that we're the investor, but our clients are the investor, and I personally invest a lot. I ask a ton of questions. I'm the most annoying buyer or the most annoying investor to anyone. I'm very annoying to the people that borrow my money. They're required to send certain things to me on a consistent basis. That's just the way that I manage my money. And if they get frustrated or annoyed by it, I'm moving on to the next person because there's another opportunity. And what I have seen and witnessed is where it might be someone that has a team of investor relations folks, and they don't know the answer to all the questions. So they either try to do the fake it until you make it and then really get themselves into trouble, or they get annoyed by the questions and they get frustrated, and that frustration comes out in their tone, and then they totally lose that sale or lose that opportunity. And I've seen that time and time again, especially as folks grow an organization and they move out of the capital raising efforts and they put that into the hands of investor relations folks. I'm not saying that's with folks here. I'm just saying I've seen that happen before. So that would be my wisdom to share. It's actually really not my own wisdom. It's also wisdom that I took from people that are much older than me, that have gray hair. So when I'm at conferences like this, I try to find the people with gray hair or no hair, and I try to talk with them. I should say men and women. So thank you with that. Let's give our panelists a big round of applause.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.